by 100,000 barrels, and that took overall the supplies for distillates down at nearly 13% below last year's level. I'll just end by saying that there was more food for the bulls to chew on yesterday in the form of the economic numbers. We saw the US first quarter productivity gaining more than the market expected. So that again suggested that the economy is on the mend and also boded well for oil demand. So in the near term, we are looking at higher prices. The bulls firmly in control, although there is a contingent of traders out there who are looking at a correction, especially at these very high levels. Back to you now.
Okay, Sri, let's talk to Jonathan Kornfeld, Agent Director at Hudson Capital Energy, for some insight on what's going on in the energy markets. Jonathan, look, the overnight numbers, inventory numbers from the U.S. actually seem pretty bearish, but the market went completely the other way. Why? What's going on here?
Right, it really did. I think the market really chose to focus yesterday on chose not to look at the short-term inventory numbers and really chose to look at what's going on, supply and demand picture in the long term. You really saw that yesterday. The build in the crude stocks of about 5.7 million, that was really based on just a short-term surge in imports into the U.S. And you look at the refinery runs where they take the crude oil and turn it into gasoline, that has slumped further, and it's been slumping. So the crude is getting delivered, it's just sitting there. And there's no reason for the refiners to turn it into gasoline because of the refinery margin is so historically cheap right now that they're buying an expensive feedstock and turning it into a cheap result. There's no reason for them to keep doing that. So I think in the long-term picture is certainly still in place for the market to keep going higher, without a doubt. Just based on these numbers yesterday, really aren't going to have that much of an impact.
Look, Sri was talking about how we have seen oil prices essentially doubling in the last year. If you look back as far as 2002, it's gone up 6 times.
Yep.
How much of this, though, is really because of the supply-demand imbalance that you're talking about? And how much of it is the speculation that we're seeing from investors looking for a place to park their money and get returns? Because it's been paying off. They put the money in oil, oil keeps going up, right?
Right. It has been paying off. For years now it's been paying off. And I've said it before that I think the investment flows have a day-to-day impact on volatility. They cause the $4 or $5 swings in the market. Certainly they've had an impact in pushing us higher. However, the supply-demand picture is so dire. Every day the list gets longer for demand issues and for supply issues. There's just one more reason almost every day for us to go higher. So that's really the factors.
But has the supply-demand issue changed so much to cause a doubling in oil prices from a year ago to today?
Yeah, from a year ago, I think people are just digesting what's going on. But if you look back 10 years ago, China is certainly a different place. India is a different place. Russia, the Middle East, these economies are all booming a lot differently than they were 10 years ago.
Jonathan, we got President Bush next week putting on the pressure on the Saudis to turn on the taps to boost production, to hopefully bring these prices down to more manageable levels. Do you think these comments, the comments that he's going to make next week, are largely symbolic, largely for the folks back home, with OPEC really going to smile sympathetically, offer some reassuring words, but not a great deal of action?
I don't think OPEC is even going to offer too many reassuring words. I think it's 100% symbolic. I think in the waning months of the presidency, I think he's just trying to send a message that, hey, the Republicans do care about your oil price. So I think it is pretty much a waste of time for him to go over there. I don't think nothing will get done. It would be a huge surprise if anything was to get done with this trip. So it's just lip service, and there really isn't anything the Saudis can do. There's not much OPEC can do with. We've seen recently targets for most of OPEC for 2010 have all been cut in terms of production. So they're not going to increase.
But having said that, isn't the quandary that OPEC faces that they don't want to be cast as the bad guys who derail economic growth, who really kill the goose that lays the golden egg in the form of the U.S. economy, which remains the top energy consumer? So do you think that we will hear OPEC possibly hold an emergency meeting in the not-too-distant future and talk about some symbolic production increases, maybe increasing the quota to justify the overproduction at the moment?
Depends on where we head in the short term. If we break 130 in the next couple of weeks, then you might see something like that. However, I think we are going to bounce off 1.25. OPEC, at the same time that they're being assailed by the West, they come back and say, well, it's investment flows that are driving it up. So while I don't think their argument has much ground, I don't think the West's argument has much ground either. So it's just a lot of political rhetoric going back and forth, and honestly, nothing seems to be getting done about it. It's a little bit scary.
All right, Jonathan, thanks so much for joining us today.
Thank you.
Jonathan Kornfeld, Asia Director at Hudson Capital Energy, joining us here. Just ahead, the Shanghai market is about to close for its lunch break in about 13 minutes' time.